Hey, everybody. Welcome to the Space Coast Real Estate Spotlight. I am here today with Jason Taormina, the Director of Mortgage and Insurance with AutoPayPlus, and I'm excited to hear what he's going to tell us.
Let's go.
Let's go. What's up, everybody? So I'm actually in Jason's office, which is not on the Space Coast, but I love this guy so much. I wanted to drive all the way out here to the the AutoPayPlus headquarters here in, we're in Orlando, right?
Orlando, yeah. Downtown Orlando.
Downtown Orlando.
That's right.
So AutoPayPlus, if you haven't heard what this amazing product is, it's not a product, it's more of a service, right?
Yeah.
Is that fair to say? Service?
Yeah, more service than product. Yeah.
I wanted Jason to come on today to talk about it. You're somebody that has monthly recurring payments, such as auto loans, student loans, mortgage loans, personal loans, anything like that. They have an amazing opportunity for you to get in front of paying off that loan much sooner, less interest.
That's right.
All kinds of fun things. So I want to take a second to jump right in and have Jason explain to us what AutoPayPlus is.
Totally. So, as we know, like bills are always due on a monthly cadence.
Yes.
Right. However, 12 months in a year, but there's also 52 weeks in a year.
Yes.
And
every year.
Every year. Yeah. God willing. Right. So, by the national average, about 48 to 52% of folks get paid on a biweekly pay schedule. Right. So having that said, if you take your 12 months, you double it, you're at 24 installments.
Yep. Whereas
if you take 52 and you divide that in half, now you're at 26, right? So 12 or the 24 bi-monthly payments compared to 26 bi-weekly payments, you're basically given like an extra principal payment.
Yeah.
So that may not sound like a lot, but really what makes it important is that it allows someone to pay more into their current, asset obligations they have without having to restructure their whole lifestyle, right? You're already getting paid bi-weekly. So because of the 12 months versus the 52 weeks, there's 2 months out of every year that have a third debit cycle or pay cycle rather in there just organically, right? So if you're already used to getting paid bi-weekly, and we're debiting out of your account for your assets that you're trying to pay down quicker, it's just happening automatically.
Yeah.
So that's where the auto and AutoPayPlus is automatic or automated. And the idea behind that is that you're able to pay down your debts faster, build equity faster without having to necessarily budget differently.
Yeah, for sure. You guys probably know this is our take two. We actually recorded this entire interview last week, and because of user error, that's me, I'm the user.
I'm the error.
Yeah, he's the error, I'm the user. We had to pick a second location because it just didn't work last week. I forgot to record. Like I forgot that the mic wasn't working. Okay. Essentially we had no microphone. It was like if you were standing on the other side of Colonial and we were trying to have a conversation. That's what it sounded like. One of the things that we talked about in our last interview was, okay, it sounds easy enough. Great. So I'm going to make an extra principal payment. Why can't I just do that on my own? Why do I want to ask you to do that for me?
Yeah. And you totally can. And it's really on the front end of it. You can do all these things. You can, set yourself up to make these accelerated payments. You can certainly do it on your own. Some of the problems with that comes into the fact that a lot of your servicers and your note holders won't allow you to make any kind of partial or accelerated payment. So let's say you did just want to break up your $2,000 mortgage into a more manageable $1,000 cadence, right, throughout the year. A lot of the note holders and servicers, if you send anything less than that $2,000, they look at it as they don't know where it's supposed to go, right? You didn't tell them it was going to go to principal. You didn't tell them it was going to go towards your monthly payment. If it was supposed to go to your monthly payment, but you haven't already satisfied that current monthly payment, then they don't know where it goes. So they essentially kind of just push it to the side. It's not gone, but they push it to the side. So what that results in is you having to pick up the phone, possibly wait on hold, go through dial prompts, things like that. to finally get on with your rep from your lender and say, hey, listen, Jason Taormina here. I want that $1,000 I sent in to be applied to principal.
Right. So Jason told me a story, which we shared on the last one that didn't make the air. He had a friend that got a brand new mortgage, was trying to do that accelerated pay principle, which everybody ought to do, but not every loan servicer accepts partial payments. So this guy was making payments dutifully on time. But what happened was, because he didn't make a full payment, the mortgage company didn't accept that partial payment at all. So then when he made the second partial payment, they just set that aside in an escrow account, and so on and so forth, until he gets notified that he missed his first payment entirely, and he's now in default and on the doorstep of foreclosure, right?
Right. So it actually went all the way out to, and and granted, there's some onus on him too, right? This guy's a small business owner, busy guy. So in his mind, he was just able to do what he had always done in his previous home. So
Sure.
again, busy guy, didn't really have time to maybe watch his mail as much as he should, things like that. However, he got as far out as 90 days on the mortgage, right? So at this point, he's missed the first payment, which is like an automatic default, like Nate just said, right? So now you have 30, 60, and a 90-day late on your credit report. It's a lot to unwind and unpack at this point. Now, granted, the plus side is, if there is a silver lining in all this, is that he was able to get it worked out. And the money was still there. For his servicer, like Nate said, they kind of threw it in an escrow account, and it was just kind of unlabeled. They didn't know where these half payments, these partial payments were supposed to go. So it wasn't that the money was gone. He didn't lose that money, but not only was he not making the payments, but he wasn't able to set it up in a way that really worked for him how to do it, because it does require a little bit of kind of back
Sure.
office admin work to get that done.
Yeah. So every mortgage servicer is going to have a little bit of a different policy on that. So when you buy a home, whether you get an FHA loan, a conventional loan, VA loan, USDA loan, doesn't really matter. There's going to be somebody that's going to buy the actual note, the paper, almost immediately. So 3 of those big companies are called GSEs, government sponsored enterprises, are going to be Fannie Mae, Freddie Mac, and Ginnie Mae. And so they're actually buying the note, the mortgage itself. And then when you make your mortgage payment, you're making it to the mortgage company. But the truth of the matter is that mortgage company is what's called the loan servicer. They're servicing the mortgage. So when you're making payments to loan servicers, each of them has a little bit of a different, maybe internal policy. So if you don't know going in what your loan servicer's policy is, and you're in a mode of making partial payments, and it gets sold to another servicer, they may not accept partial payments. So every time you get a transfer letter, as it's called, you have to check with that loan servicer to make sure that you can continue to make those partial payments. And if you fall into a position where you can't, you're going to have to make full payments. And then the only way for you to essentially accomplish the same thing is to make one full payment every year. You can make a full payment and that'll get allocated toward principal. But if you're doing the every other week thing that you're used to, you're not going to have that partial payment applied at all. And you're going to be in the position that we were talking about with Jason's friend, where he was 30 days, 60 days, 90 days late. Not 100% his fault, because he was making his payments. He was just trying to pay off the principal sooner, but he got into this predicament. So the easiest way to avoid that when your loan servicing gets transferred to one place to another is to work with AutoPayPlus, because they're going to handle all of that for you. You're going to make them your partial payments, and then they're going to handle all the heavy lifting, right? They're going to take the legwork from you and handle that for you.
Well, and the thing is, again, going back to what you said about, why can't I do this myself? There are some loan servicers out there that do a great job of offering biweekly payment options.
Yes.
But as you know, and like you kind of made mention of, loan servicing does get sold. That's how entities manage their portfolios, right? They only have to. They want to keep certain, certain types of loans in there. So they get bought, they get sold, and it happens all the time. And the problem could be if you get set up where you're on a biweekly cadence, you think you're going to build that equity faster, get this loan off of your, out of your debt to income ratio quicker. And now your loan servicing gets sold. It kind of throws off your financial planning, right? So this is really in terms of getting the loan is great, getting the house is great, and the keys are great. But what are we doing after the fact to make sure that you're still looking out for your financial well-being and financial future and planning down the road to where, it really puts you on the path of success, where even if you got, the world's lowest interest rate during COVID of 2.5%,
right,
you still want to stay in that loan for 30 years, right? You want to get out of it as quickly as you can. You don't just want to, kind of coast on by. You want to keep planning to, to get out of debt quicker.
Absolutely. If you're like most families on the Space Coast, you probably have more than one auto loan. You might have 2 auto loans. And in addition to that, maybe you've got a child that is now enrolled in university and you're paying a student loan debt with them. Maybe you also have more than one mortgage. Maybe you've got an investment property, you've got your primary residence, and you might also possibly have a personal loan for something. Maybe you put a pool in, maybe you got a personal loan to consolidate debt. So you probably have multiple trade lines, as it's called, on your credit report that are just steady monthly payments. And you make so many payments and then the debt goes away. So you can also take advantage of AutoPay Plus for all of those, as we talked about. So talk us through how that works, Jason. You can enroll with AutoPay Plus for your mortgage and then add all of those other trade lines in. What does that look like?
Yeah. So, and that's something too, where kind of think of all the things that you just listed off, right? All of those different assets have different pay dates too. So that's one thing too that, we haven't really touched on, is that kind of going back to what I said in the beginning about with us automatically debiting your account on your pay cycle. So mortgages are always due on the 1st, right? We know that. However, all the things that Nate listed off, your auto, your student loan, possibly medical debt, credit card debt, the HELOC for the renovation, all those could have different due dates. So to us, because we are a concierge service, it doesn't matter to us. So we're going to automatically debit you according to your direct deposit cycle that you have. But then we're going to allocate those funds correctly. So if it's a mortgage, it's on the 1st. If it's an automotive loan due on the 12th, it's going to go out on the 12th. All those different dates are going to get hit. So it's essentially taking, the burden of managing, your car, your spouse's car, your home, your children's car, things like that, and having to make sure that you're getting all those things set up, not only to be paid, but with that accelerated component to get them paid down faster.
Yeah. So what if I'm somebody that doesn't have a regular pay date? Like what if I work on commission, or in the mortgage industry, we get paid when a loan closes in funds. We don't get paid every other week or, twice a month. Am I able to still enroll?
You are, absolutely. So it just depends on what it is you're trying to, your goal, right? So we have some folks that instead of getting paid bi-weekly, they get paid bi-monthly. So when you get paid bi-monthly, you don't apply to that 48% of folks that get paid on a bi-weekly schedule. You can certainly still take advantage of paying your loan down faster. And what we do is we would just take your one full monthly payment and we would break it up across those 24 bi-monthly paychecks that you already get to make sure you can take advantage of that accelerated component. To your point, folks that don't get paid on a regular pay schedule, or maybe they are using funds from as a host of an Airbnb or a Vrbo to pay down a second home or an investment property, things like that. We can go ahead and we can point those debits and point all of those withdrawals at whatever account they want it to be on whatever set schedule that works for them.
Perfect. So there's nobody in any type of line of work that's excluded from being able to take advantage of this. It's just you're going to structure it maybe a little bit differently.
Correct.
But nobody's excluded from buying into this. If
yeah.
You will.
Well,
I don't know if buying in is the right word, but
and then kind of going the other way, right? Of like, you have over here of like commission type folks getting paid, per transaction.
Yeah.
But then the other way, really common out with like L3 Harris or, some of the folks out at ULA, Blue Origin, a lot of those contractors will get paid weekly. Mm-hmm. And so same thing there, that can be set up as well. We keep talking about bi-weekly and bi-monthly, but weekly can be set up the exact same way.
Right. So whether you get paid once a week, once a month, twice a month, 3 times a month, doesn't really matter. They'll be able to tailor your structure of payment to the process. Is that a fair thing to say?
Absolutely.
Nice.
Yeah.
Nice. Well, what else can you tell us about AutoPay Plus? Why would I want to do that? I mean, we talked earlier about how I could do it on my own. Sell me on why I want to give you my money for that.
So as Nate knows, my favorite analogy when it comes to AutoPay Plus is your gym routine, right? So I'm a big fitness guy. I absolutely love it. Big part of my life. But with anything else, right, and especially with fitness, it's consistency. And I like to make the joke that everyone on January 1 or December 31st, we have the goal of it's very, very common, like get back in shape, get healthy, things like that. But then unfortunately, by like the end of January or maybe even the end of February, the gym has somehow mysteriously cleared out, right? And that's because life happens and life gets busy, and consistency with anything is really, really hard, whether it's health and fitness or whether it's finance. And really the same rules apply for getting ahead and getting yourself to that goal. So for me, we are that personal trainer for your finance. We're the one that keeps you accountable month over month, not just in, month 1, month 2. We make sure that you go all the way through the year. So even as life comes up, even as things get hard, we keep you on track to make sure that that is the first thing that's happening. So almost kind of like protecting you from yourself. As soon as your direct deposit goes into your account, we're automatically debiting you for that, whatever installments for, like what you said, whatever trade lines we have. So it kind of protects you from yourself. It doesn't allow you to go out and maybe misspend, spend in the wrong place, buy things that maybe you shouldn't be buying. Kind of those, what's the word I'm looking for? Like the luxury items that like you don't need, that you tell yourself that maybe you really, really want, but it's certainly not a need. So we're making sure that you stay financially focused and keep yourself on your goals moving forward and not letting yourself kind of veer off path.
Yeah. So 2 things that you just said, I really want to key into. You said the accountability and the financial fitness, if you will. So it's really easy for us to make a goal. It's really easy for us to say, I want to do this. What becomes more difficult for us is the consistency and actually following through with it long term. So we might do it for a few months and then we might get off track. And it's so much harder for us to get back on track. So AutoPay Plus takes away that challenge where you're not going to have to remember to get back on track, because they're going to hold you accountable to that. And they're going to help you stay financially fit to be able to get those payments made, so that every year you're tackling that extra payment. Now, if I'm somebody that wants to more aggressively pay off my loan, is there an option for me to more aggressively do that? And you can apply multiple payments at the end of the month or end of the year rather?
Yeah, totally. And even before that, it made me think, you guys ever played the envelope game?
Yes.
Like with the 52 weeks, and you're supposed to put in like $1
Yeah.
for each week and things like that. For anyone who's ever done that, right? And I say this because I'm guilty of it too. I have like the little binder thing, right? And I did this when I was younger, and I can't tell you how many times that like I didn't complete the whole year. I set out in the beginning of the year to start saving money, start putting funds aside. And for those of you who aren't familiar with it, what you do is you put in the dollar value of the week that you're in, right? Is how it works. So like week 1, you throw in $1, week 2, you put in 2, and then so on and so forth. And I think at the end of it, it's like $1,300. So it's like something like small, nothing like crazy. But even that, right, is so easy to fall off of. And that's not even near the amount of like a mortgage today.
No.
You can't get a mortgage nowadays for $1,200, $1,300, and not easily, at least.
Right.
And even that kind of like smaller amount is hard to stick to, even at increments of $1, $2, $3. I'm guilty of it. I know I can't possibly be the only one. So, going back to the additional payment thing, is in our portal, what we do is we allow you to like gamify it. Right. So like you can add additional principal to your monthly payment, to those biweekly debits. And it kind of just like gets you thinking, right? Because like Nate and I were talking about before, like it's super fun and exciting to get the house, and super fun to know that you're pre-approved, you're moving in, it's a super fun and exciting time. But then a lot of times people just stop, thinking about that. Right. So this helps you kind of gamify that in a way where you can go, all right, well, maybe if I just started, making coffee at home in the morning with my Keurig versus running to Starbucks every day, maybe that's even saved me $20 a week or $20 a month, whatever that may be. You can plug that in and you can see what that looks like. So now it will actually tell you on our calculator on our site, like as quickly as, just making those little changes, not eating out for lunch and versus packing a lunch, what that does. So it really gets people financially focused on, how they can grow and really where their money's going and how their money works for them in a way that maybe they hadn't before.
Right. Yeah, exactly. And I like the fact that you said that you can gamify it, because it does get a little bit more exciting when it becomes less monotonous. And there's a lot of things that we do during the day that are super boring, but have to be done, right? Nobody loves taking out the trash, but if you don't take out the trash, your house is going to be full of trash, right? There's things that we don't like to do. And one of those things that most people don't like to do is pay bills. I actually know very few people that enjoy paying bills, but this is a fun way of paying a bill and also seeing the outcome of that on the system. You can go in and actually, there's a slider, right?
What's that?
In your system, there's a slider, or there's some way where you can.
It's a bar, and every time you hit calculate, it recalculates in as little. So you could, let's say, the example I like to use is like with possibly being like an empty nester after kids leave for high school, right? So you have kids in freshman year of high school, and very rarely do people stay in homes for 30 years, right? We all sign the 30-year note or 15 years sometimes, but very rarely do we stay in the home for 30 years.
Right.
And even if we do stay in it, chances are we've somehow changed the rate and term of that financing somewhere along the way, either just through that or through a cash out or something. But at 30 years is like too far to like kind of quantify, really. I mean, no one thinks 30 years in advance. So the one I like to use is 4 years, because very common where you could have kids in like freshman high school age, and in 4 years you may be an empty nester. So that may be the time that you're going to renovate the kitchen or put in a pool, or maybe get a second home on the beach somewhere, or maybe even sell the house altogether.
Yeah.
So really, even just in that short 4 years time versus like the 30-year time, you can see how quickly you can be ahead, and really how you can make that home work for you. So when it does come time to do whatever that is that you're trying to do to, pull some money back out of that asset, you can see just how quickly you're there.
Yeah, which is awesome. Being able to see that, seeing the actual fruits of the labor, if you will. Doing an activity is great, but seeing the outcome of that activity is what really motivates us, or at least it motivates me, right? Doing an activity and then seeing the outcome of that activity.
Right.
Going into the gym. I don't particularly love going to the gym. I'm starting to like it more and more, but seeing the outcomes of going to the gym keep me motivated.
Absolutely.
So if anybody has any questions about AutoPayPlus, there's going to be a link down in the show notes here, or you can reach out to me directly, or you can talk to Jason directly, and we'll be happy to go over all of your options with you and help you get on track to not only pay off your mortgage sooner, but all of your other monthly recurring debts. So everybody, yeah.
I mean, it's pretty much that simple. I mean, I don't know. It's one of those things where, again, like you said, it's why doesn't everyone do this? And the long and the short of it is everyone should.
Everyone should.
Everyone should. And it's like we made mention of before, sometimes it's just not that easy. So we like to figure out ways to make this easy for our consumers, for our members, to get out of debt quicker.
I want to help everybody find a way to not just pay off their mortgage sooner, but to understand how to leverage money to acquire acquire more wealth. Like that's what I strive to do in life. I want everybody to feel like they're not getting the pinch. And this is one way to do that.
Yeah, totally.
Awesome. All right. Well, thanks, Jason. I really appreciate you taking the time twice now to meet with me to talk about AutoPayPlus. And thanks for inviting me to your amazing downtown Orlando office. I appreciate you, brother.
Thanks, man. Appreciate it.